to build real financial abundance and prosperity, it doesn't happen by accident. Those of us that have built it and have it have done so with a lot of intention, with a lot of all the stuff that we've talked about on the program.
Welcome back, wealthy women, to Women Creating Wealth. We are so happy that you're with us today, and you are going to be so glad you tuned in because we have Krisstina Wise with us today. She's a wise woman, and she is a real estate mogul. She's a millionaire coach, and she is a creator of several multi-million-dollar businesses. Krisstina, thank you for being with us today.
I'm so excited to be here. Thanks for the invite.
So, Krisstina, I know that you are one of your many hats is that you're a very successful real estate investor. And I know one of the questions that people have when they're just trying to get started in investing and they're a little nervous, but they know they want to do it is, how do I know when I have enough money to actually invest some of it into something like this, which could potentially need to be fixed up, right? It could be when you buy an actual piece of property compared to a piece of stock, you don't necessarily know how much is going to be involved in the project. How can people feel comfortable that they're good to go there?
That goes off the question that you and I talked off a little bit offline is the question is how much money is enough? And the reason why I always start there is because how much money is enough is really a philosophical question that I think is always a good starting place when we're in this financial or money dialogue. When we start thinking about money differently, to start inquiring about wealth and these things, that's the first question we want to ask. And a lot because it reverse engineers into what ultimately will be our investing strategy. So to start just by investing strategy without it being attached to a bigger picture sometimes can get us off track pretty easily. So the first thing with how much money is enough overall means how much does it cost to live our good life today? And it's really important to know that. Is it 100,000, 200, 250, 350? But each one of us needs to know is how much money is enough to live our quality of life that we want to live. The second piece to that is how much money is enough that we need a net worth so that we can live off the income from those income producing assets. So we need to know that. And then those go back to inform how much money we need to earn or make to be able to have enough money to pay for our quality of life and have that extra money, like you said, how much money is enough we need in that investing bucket so that we can buy that piece of real estate. But that's where all these numbers are linked together. What I like to just share straight off the bat, and then I'll answer your question, is I like to say there's these three fundamental categories of money, and they're very distinct. And so we need to think of them very distinctly and know that we have to work with each of these categories distinctly, but they're all integrated at the same time. So the first one is where we talk about our present self household. So our present self household means how much does it cost to pay the bills, right? So how much does it cost to live our life on an annual/monthly basis? And is it $5,000 a month, $10,000 a month, $20,000 a month? But how much does it cost to live our life today? And that's what I always say, that's step one for all of us, if we haven't done this work, is to answer that question. And so add up all your expenses for the full year and divide it by 12 and see where that is. And then let's just say it's $10,000 a month to keep the math easy. It cost us $120,000 a year to live. It's $10,000 a month. That just covers our expenses, our mortgage, our cars, our clothing, our food, our utilities, all the stuff. And then the follow-up to that is that enough? Meaning, is our quality of life where we want it to be? Or does it feel like we're making a lot of sacrifice or compromise in things we'd rather our life be because it's not quite enough? In that case, we need to figure out how much is enough. But let's just say we say like 10 grand a month is covering all our bases. If we win the lottery, great, we'd love to spend that money, but otherwise we're doing really well. But that's just to cover the expenses. That informs us that we need to earn $10,000 a month after taxes to be able to pay those bills. That goes back to how are we earning the money and are we earning enough? So say we're earning $10,000 and we're spending $10,000. And that's what I call the break even. Now, the reason why we do this work first is because if we're not creating a surplus, there will never be the money to be able to invest. So we need to know, like that's where we get to your question, is how much money do we need to invest on an annual basis to be able to build this net worth thing? Then if we say, let's do $48,000 a year, we've decided we need to invest $48,000 a year to be able to build this net worth. That means that we need $12,000 a month after taxes, not $10,000 a month. So now we get to determine that we have a $2,000 a month income gap. So the first problem to solve is like, we need to earn more money, or we need to decrease our expenses by $2,000. So that's always the starting place. So I like to start there, because jumping into some of these other questions and answers, we never get there because we don't know these numbers, and important to know beforehand. To your point is how much money is enough to get invested in real estate? And the reason why that's a loaded question is because there's all different types of real estate to invest in, and there's all different types of ways to invest. So if we're doing it traditionally, and I know you know this, probably most of your listeners, but the most common way people think about investing in real estate is like, let me go buy a rental property. And so if we're buying a rental property, and we're going to do it traditionally, we're going to be looking at 15 to 20% down, plus all the costs to buy the property, which are usually going to be between 2 and 5%, plus some reserves that you want to have, and if there are repairs and things. So there's lots of spreadsheets out there, very simple spreadsheets you can pick up online or just go to Google to help one determine this. So it's typically pretty cash intensive. So what's difficult is the entry point with traditional real estate in this case is it's cash intensive. So you'd better be saving a lot of money, probably looking at 25, 30% of the price of the house as that. But then that's not required. That you can look into seller financing. And there's many other types of unconventional ways to buy residential rental real estate, and to be able to get in many times for much less. That before that's like, do I want to be a real estate investor? Do I want to get good with numbers? Do I want to do these spreadsheets and these profit analysis and these analysis? And do I want to manage properties? Because that's the cost of investing in real estate that's outside of just the financial piece.
The good news is that there is a formula, and that it is possible to figure out. Once you figure out, is this the type of real estate investor that I want to be? Would I rather do a REIT? Would I rather do, hard money lending? Would I rather do some other, syndication or some other type of real estate investing?
The normal way to think about this is there's just one way to do it. But the reason why real estate is so great is that there's all different types of ways. Like you said, if you just want to go the stock market way and do a REIT, you can do that you can go to Vanguard and buy something
Right,
there. That's
exactly.
very low risk. You don't need to know much. They take your money. There's a second way, which there are a lot of funds that we can invest in, meaning they're not public traded funds, but usually with a fund, a minimum entry point of a fund is $50,000, but usually they're $100,000. So to get into that game, you're looking at $5 to $6, $50,000 to $100,000 minimum to get into a fund. And a fund basically is you're buying shares. And so if a fund means you have a fund manager that is going out for capital raise, and they say, hey, we want to buy this piece of real estate for $10 million. And so they're going to raise $10 million by investors like you and me that put in our 100 or 500 or however much we want. And then we own a percentage of that LLC of that fund based on the amount of money we put in. So, and then what they do with that, once that property becomes cash flow profitable, positive, then you can get some dividends. So the idea is you get your initial investment back. That's usually the promise of a lot of these funds. And then they have an exit, they sell the property, and then you get any type of return. So again, that's a nice way if you have cash and you want to invest in real estate, and you want to get some of the tax advantages from being invested in real estate. That's a great way to invest. And again, it's hands off. You don't have to manage it. I love funds. I love funds because it's hands off. I put it with people that I trust that have had really good historical performances. And then I get big returns every so years, and I don't have to do a thing. So that's that piece. And a third piece is like buy a rental property, and you can do it. Someone else manages it or you manage it. And I own a lot of rental real estate as well. So that's another piece. And then so there's, again, the point there is there's so many different places to invest. Another place to invest, if you just like be in the bank, is that, there are a lot of investors that buy real estate And then they're not wanting to go to traditional financing. So they like to go to private investors. And so I do that too. Like I have a couple real estate investors that when they buy a really great piece of real estate, they come to me to see if I want to be the bank. And it's more like hard money returns where versus they're going to pay me. They don't want to go to traditional financing, but I might get 3 to 4x the interest than I would get on other investments because it's a little bit higher risk. But again, I just like to invest my money. I love real estate. I understand how to look at their returns. And, when they're successful, I get my payday, I get my money back in like 6 to 12 months. And you can do that over and over. So the sky's the limit when it comes to real estate. And you just really have to pick your poison and figure out which one is the one you want to pursue and get good at that.
What was your first real estate investment?
My first real estate investment was so part of my backstory is I got out of college and ended up selling real estate. And I made a really nice income, hard worker, hustler, made lots of commissions, was great at sales and made really good sales income. But at the end of every year, I was totally broke. And not only would it, I'd make a high, multi 6-figure income and get all these awards and medals around my neck by being, top salesperson. But starting January, December 31st, we did the award ceremony and I would be on stage with all the medals. January 1, I was totally broke and like starting over. And it was like a handful of years of doing this. And it's just like constant hustle. And just thinking like, oh my gosh, I need to go hustle more. I need to make more money. I need to sell more houses. And I really got stuck in that trap. And then ended up getting divorced, and I was the primary wage earner. Ugly divorce, fighting over the stupid thing called money and all the stuff. And I wound up in a situation where, not only did I not have money, but because as a primary wage earner, I had to pay child support. I got awarded with the privilege of paying all the back taxes that hadn't been paid and the credit card debt. So here I was, 100% commission job, now a single mom. And I'm totally broke, no passive income. And like, how am I going to single mom and be in 100% commission job? And it was really financially ugly. Like we didn't have anything. We moved out of the big house in the suburbs, this teeny tiny, crappy part of town. I could tell a lot of story there. And the only thing that even kept us alive for like 6 months after that was I had colleagues at work. I was so ashamed and embarrassed because here I was, the top salesperson, yet I'm in a situation now where I basically have to take handouts to be able to put a roof over our head. And so I was just filled with so much shame and embarrassment, but mostly I thought, how did I wind up here? How did I make so much money? I'm in a situation where colleagues at work are pitching in to pay the utilities, to pay, they brought over groceries, they brought over blankets and furniture just so that we could survive. We were in that bad of shape. And, I was so lucky that I had peers and friends that were willing to do that, but my goodness, there was so much embarrassment and shame that came out of that. But then the lesson there, when I kind of got over my pity party and realized the only way to dig myself out of this was I had to figure a way out. I thought that there's got to be more to this money equation than meets the eye. Like, how did I make all that money? And I literally cannot afford to turn on the utilities. Like, I didn't have the deposit to turn on the utilities. And it just got me thinking that there's got to be something more to this. Like, I just can't hustle and sell more houses to keep this going on forever. So like many of us, I read this, book called Rich Dad, Poor Dad that got me started. And the whole Rich Dad, Poor Dad, when he talked about the quadrant, which, we can be employees, self-employed, business, or investors. And I realized I was in that self-employed box, that I was just slinging more houses and, but I would be stuck there forever. And so after reading that book, we're living in this really crappy apartment and again, just all that situation. But I read that book as kind of, I don't know, someone probably pointed it to me or something. But he talked about investing in real estate. And he didn't say how, he didn't say what to do, but he's just said that that was the way. And that's all I needed, was just a different mindset and perspective, and understanding that the way out of that trap is to be an investor and realize, like, man, I help people buy houses. Why don't I buy houses? So my very first investment was, I found this duplex, and I had no money. And I'm just telling the story because, if you think traditionally, I have to have all this money to get started, but I had no money, but I found this duplex and I did the math and I thought, oh my gosh, all right, I don't have any money. I'm getting back on my feet to try to make income. But if I can buy this property and then I can get the front unit to pay for our unit, it will cover almost the whole mortgage. And so I don't have to, this will give me a chance to get back on my feet. And what I did is I just sent a letter. I sent out a bunch of letters to a bunch of duplex owners. I had this one in mind and sent a letter. And then I went to knock on the door. I kind of played the mom card. I had my 2 kids with me and said how much we'd love to live there. And they happen to live next door in this one and we'd take care of it. And, we want to be their neighbors. And there's my situation. And I bought that house with no money down, duplex, did seller financing, owner financing, did a balloon, I think is 24 months, or I think it's 24 months, only 2 years balloon, and told them my whole history, had people, friends, and my manager write references and do all the things. And I literally bought my first property that I still own today, by the way, it's worth ridiculous amount of money, and cash flows, ridiculous amount of cash flow, and it's totally paid off today. But that was my first investment. I bought it single mom, not a dime in the bank account, barely had an income, and bought it 0 money down, and knew that I had to figure out a way to pay it off in 2 years and get traditional financing, and I did. So I just shared that story that sometimes our own mindset or beliefs are the limitation to getting started. And when we just understand the fundamentals and willing to just be creative, you can get into real estate and I did, with 0 down. It's possible.
Yeah, it's absolutely true. But you knocked on the doors, you sent the letters, right? You didn't just think, oh, I'm just going to go. I don't know. That's the secret, I think, right? Is that you have to put the work in if you're going to be creative. You reminded me of a couple of things while you were talking. One of them is somebody that I interviewed for my book, Tom Trong. His mom, when they first moved here from the Philippines, she decided that she didn't want to be a renter. And she literally went door to door to friends, to neighbors, to anybody she knew, getting like $300 from this one, 100 from this, and just put all this money together to use for the down payment on their first 3-family property. And it's just necessity, but it's hard work. But do you feel like that you didn't do it before, and you probably may never have done it if you didn't have that pressure and knowing.
The pressure definitely was part of it. And because at that point, it's almost, I didn't have an option. I was going to knock on every door and be told told no 1,000 times. But I'd read it was possible. Other people had done it. I could do it too. But yeah, it did take work and creativity, and hard work and creativity pays off probably 9 out of 10 times. And, in my experience.
And then after that one, were you just kind of hooked and like, wow, look, it's possible. I can do it. Yay. And then.
Yeah. I mean, I did that one more, like you said, out of more necessity, that trying to just doing the math, and I need to be an investor, and I could basically live rent free to get myself back on my feet. And it did exactly that. It worked. And, ultimately then I moved out of that. I bought the next property. I made it a goal to buy a piece of real estate every 2 years. So that was my goal. Not that I hit that, but that was my goal.
Yeah.
Knowing I probably need to save a certain amount of money and be looking for the right deals, but that initially wasn't what it was. And so in the way I did that personally, now I wouldn't necessarily say this is a strategy, but what I did is I would jump properties. So that duplex, I moved out of that, then I bought the next property. When I was selling real estate and even buying real estate, I'd always teach this. I'd even say this to my customers, is that my clients, is I like to always like to look through the lens of, this is an investment property. Because even though I was going to be living in that next one as a primary residence, I was still buying it through the eyes of an investor, meaning if I stayed here 2 to 3 years, could I make this amount of money? Could I cash flow it? And so the type of property I would buy next to live in was something that equally I wanted to live in, but 2, that hit certain criteria that I could turn around and invest it. So that's what I did for probably the first 5 years, is that I would, that duplex, I rented the second unit, held on to that, bought the second, that I guess kind of third unit, the third door, lived in that for 2 years, did some fix up, did some elbow grease while we lived there, made it really pretty and nice, enjoyed living in it. And then got that to the place. And then it's like, oh, and as I was growing my money and my business and different things, so I had a lot more money too. So then I got onto a bigger house, and then I got the bigger house that we could live in, but then it had a back unit that I could rent out. So, and I was looking for a property where I could have that other cash flow and I could rent that out. And this is even before Airbnb, but I was doing a little bit of short-term rentals or do different things. But then that back property helped pay a part of the mortgage of that bigger mortgage from that. So again, just being very strategic of how can I create cash flow into all of these properties, even though I was living there. So I guess I did that about four times. And then I'd had a lot of cash and cash flow. And then I started getting into buying properties, and I'd flip some and I'd buy other properties, bought commercial properties, sold those, pay off the debt of other properties. And so I just ultimately, but I think the moral of that story is a long-term plan. I had a long-term strategy, and I can't say it went exactly according to that strategy, but I started with that end in mind, and it ended up working out so much better than even my kind of what I could dream up. But it's that intentionality of knowing I wanted to have a certain net worth of properties, was a certain amount of cash flow. It's probably going to take me 10, 15 years to do that. But that's okay. I was strategic about it. And now at this, stage and age, I have a really nice portfolio of real estate. It's all paid off. It pays very handsomely in the terms of cash flow. And but being strategic, real estate's allowed me to own a really, like I said, nice portfolio and kind of enterprise of properties that's fully debt-played and debt-free, and really, like I said, handsome cash flow. But it took 2 decades of and it just grows over time. So I think that's it. Like I think so much the way real estate's sold, like it's this kind of quick fix, passive income and easy money, and everybody should do it. And I think everybody should do it, but I lost a lot of money in the meantime. I mean, I made some bad choices in there. It's not like every single one was a win. I mean, I made a couple bad choices, and I learned about depreciation and paying taxes when you sell a property. I got hit by some naivete, just maybe so you learn a lot on the way, but ultimately it all played out. But yeah, like there were some 6-figure losses in there over those couple decades too, but that's built in. So that's where it started. That's where it's wound up. And I'll just kind of close that out by saying, I think real estate is such a great way to build wealth. Every one of us can do it. I love women to be owners of real estate and have the mindset of investors and building kind of that portfolio enterprise, and to really use real estate to build our net worth and our wealth, and to be owners.
And it's perfect what you said, right? It wasn't like you started off and then you just had one win right after another, because we all, I mean, not all of us, I think many of us who've been in the business for any amount of time, there have been some things that haven't worked. And it takes a while to figure out market cycles and to figure out the different, like you said, tax ramifications. Oh, I'm going to sell this place and I have to recapture all this depreciation, and now I'm going to get slammed with taxes. And what's that about? And they're just things that, unless you have somebody sitting next to you telling you each step of the way what's going to happen or what the best thing is to do, we're just going to make those mistakes. And it doesn't mean you suck at it. It doesn't mean you just don't have a talent for real estate investing, right? It just means, okay, learn that.
Yeah, there's definitely, you learn through experience, and, there's a little bit of nuances that you figure out along the way, but don't let it deter. I mean, I know a lot of real estate investors at this, stage of life based on what I do. And I haven't met one yet that doesn't have a horror story or two of how they've lost a bunch of money in real estate, but they're all rich and doing very well through their real estate endeavors. But yeah, you don't go into it thinking it's just going to be, 100% home run.
And unfortunately, you're right. A lot of the pundits who talk about real estate investing, but a lot of them, if you notice, they're very young and they've never lived through a market correction. So they just think, oh, you just do this and then you sell it and you make lots of money. Like, well, yeah, that was the case from like 2008 on to today. But unfortunately,
Yeah,
we're
it's
getting
really,
to the end of those times.
the way it's spoken, it's like this, I don't know, magic pill or something. It drives me crazy the way it's spoken out there. And it's to understand too, there's a lot of marketers out there that sell programs and sell things that are really designed to take your money. It doesn't mean that it's truth what they're selling. there's a lot to learn and but it's not like you take a course and you're going to have this $10,000 a month passive income and your life is gravy. It's to understand too, when it's a long-term plan and you're kind of listening to what Christina and I are talking about, it's like, oh, there will be some ups and downs and some things, but you just stay true to the course and have that long-term strategy. If you don't have a long-term strategy, you're not going to have wealth. You're probably going to lose your ass if it's a right now attitude, or, I'm going to make all my money and retire in 2 years. Can't tell you how many stories like people have really done that. Like they thought they could retire in 2 years because they bought, I don't know, in 2018 or 2019 and went through COVID. And then all of a sudden things are crashing, maybe for the first time ever. So you feel rich until you're not rich anymore. And that happens a lot of time because of market corrections. It reminds me, it's funny, I was talking just the other day to, it's actually a coaching session and that's what I do. I do a lot of financial coaching. And he was telling me a story. He said, yeah, Christina, I thought I was rich because I sold my company and I sold my company for $20 million. And I thought, yeehaw, I built this company. I sold it. I'm rich. I'm worth $20 million. But all that money was in stock. And that's once I sold the company went down. And so did the $20 million because the new ownership just let that company go. And so that was a big lesson that you can be rich one day and not rich the next day.
Yeah.
And so a lot of times people have been that way in real estate, that they've ridden up they find themselves rich, they've ridden up a cycle, but they've never been on a down cycle. And all of a sudden, those people that were pundits and talking about all the stuff, you don't hear them anymore. They're not around anymore. I've worked with a lot of developers to get their ass handed to them in market corrections, and they're very rich, and all of a sudden they're filing for bankruptcy. Yeah. So I just say all this, that again, it's not just this straight linear line up. There are a lot of curves, and you get good at building that in and building in the margin of market corrections. Sometimes my cash flow's gone up in, what was it, maybe 2020, 2021. Bless you. My cash flow in Austin, Texas, it was out of control. I mean, it was so much, people were just overpaying for houses. They were coming in and overpaying for rent. I mean, I couldn't even believe how much people were paying me in rental income. I mean, seriously, it was shocking. And I thought, well, this is great. The year after, though, it didn't stay up there. The market corrected and the rental rate, it evened out to probably where it should have been all along. So that's just it. Like if you get, again, that was nice, but then it corrected. And so part of this is that you understand the market flows, the nuances, and you just, again, you understand this is a long-term strategy. And even now, like I still am working to finish out my strategy for probably the next 5 or 6 years, but I know my strategy of where I'm moving my money and what I'm trying to do to end up to ultimately where I want to be. And I think that's the takeaway is make it has to be strategic. You have to have a plan, an idea. And there's a lot of learning and, listening to this podcast and others help us hopefully learn and maybe not make some of the mistakes that some of us others have made.
Well, and you're absolutely, the word that you're not using and that I think people don't like to hear is this goals. You have this goal setting, you know what you want, you know what you need to live the kind of life that you want to live. Basically, it's the characteristics of my life that I'm looking to duplicate. It's not like, oh, I want to own X pieces of real estate. Like I realized that I like new experiences. I like to learn new things. I like to talk to new people. I just like learning and just that novelty, the excitement of going to a new place, for example, like travel definitely ticks that box for me because it's new people, it's new languages, it's new food. There's some kind of thing about it that I wouldn't have experienced before. So knowing that those are the characteristics of the life that I want to lead, then you can say, is this thing that I'm thinking about doing, is that ultimately going to bring me to this place where I have these facets of my life that I know I love? Like, it's going to be novel in the beginning, but then it's going to become mundane. I'm probably not going to want to do that because it's not ultimately going to get to, because I almost think that that's like a high level, not even a goal, but like just like a high level quality of life type of realization, I guess.
Yeah,
Am I making any sense?
Yeah, I think so. I mean, I call it lifestyle architecture. One of my favorite books that I probably have a dozen books that have just been really life. I mean, I'm a reader. I've read thousands of books, every money book, business book, philosophy. I mean, I've been just a big consumer of books. And there's probably a dozen that just really have shaped my thinking. And so one of those I mean, we've all heard Napoleon Hill, Think and Grow Rich, and that's definitely in there.
Yeah.
But there's another book from Napoleon Hill that's called Outwitting the Devil. And this book, it's an interesting story because he wrote it clearly when he was alive, but it didn't get published because his family didn't want this book to get out to the public because it was so like radical in his way of thinking that they thought it would destroy the family reputation. So I think it didn't get published till maybe a decade or so ago, which was 80 years later or something. So, so that's interesting enough. Like, oh, what was he saying back then that the family was afraid that was going to ruin their reputation if that word got out? So such a great book. And it's really about him in a conversation with the devil. And it's very revealing. Love the book. But one of the biggest concepts in the book that he touches a little bit about in Think and Grow Rich, but it's this idea of drifting. And it's just that, meaning there's this, I think he calls it the hypnotic rhythm. And it's just this rhythm of life, that life is just going to carry you wherever life takes you. And you just drift along and you drift hoping things will get better, and drift, complaining about the way things are, and drift being totally unsatisfied, but not doing the work and not creating your life in a way that keeps you from drifting. And we all drift. It's so easy because cultural drift. We just drift. We drift to comfortability. We drift to the culture of what everybody else is doing. Our bodies are they want homeostasis. They want the easiest thing, That's why it's much easier to sit in the recliner than it is to get out to exercise. But that's the thing, drifting. So to not drift, there's something, the word that I've given it is life architecture, which means it's just where we started. It starts with asking this question: what is my good life? How much travel is it? Where do I live? What type of home do I live in? What do I do day to day? What really is meaningful, important? Does it matter if I have a Mercedes, or does it matter if I'm able to take my kids to Disneyland? It depends, and it's different for everybody. There's no right or wrong or judgment, whatever it is. But that's called lifestyle architecture. Then again, it's determining how much money it costs to live that life. And then when we determine there, then like I said, there's these 3 buckets of money. And the one bucket of money is that middle piece. How much does it cost to live my life? Then the second, and we have to manage our household and all of our finances. The second bucket or category of money is earnings. Like, what do I give out in the world? What do I contribute that is value that I give, and what I receive back is a thank you in the form of money. So what money is when we get paid, it's a thank you.
Yeah.
But that's a different mindset. Like, it's that if I work for a company, and let's say that I am a salesperson and I produce sales for this company, the company makes revenue because and let's say I've taken a lot of sales classes and programs and workshops and honed my sales skills, invested in myself. I've done thousands of no's that gave me the character and the thick skin to be a good salesperson. I've done a lot of personal work and self-worth, all the things I've invested in myself. And now I'm a really good skilled salesperson, and I go sell for this company, and they make millions of dollars based on my sales. Now the company pays me for that. That's a form of thank you. It's like, hey, thank you for contributing to the organization. We've made millions, and we're paying you a compensation for you bringing us those millions. So that's what compensation is. Thank you for investing in yourself and putting thousands of hours into developing your skills, blah, blah, blah. So that's the earnings category. So that's what we're doing. And if we're going to earn more money in the working world as a business owner, which I am, and that's who I usually work with and teach, or entrepreneurs and business owners, but we do that with the value of our offer through our business, or we make money through a corporation, whatever it is, but that's our earnings. Now, our earnings, the more value we offer in the world, the more money we can make, which means the more money we can spend in our household. So higher the income, the more quality of life, the more we can spend. But the third category is financial freedom. And financial freedom is not based on our skill in the marketplace that we get compensated for. What financial freedom is based on asset value. So that means if we're ever going to be financially free, we have to put our money to work and invest it in places where it's going to produce non-working cash flow in the future, passive income or that. And so what financial freedom is, it means enough from our assets cover the cost of our lifestyle. So if I was earning $100,000, my lifestyle is $100,000, my now assets produce $100,000, I don't have to go work and sell houses anymore.
Right.
So that's what we're doing, is we're working over our working career is to make enough money that allows us to be able to live a good quality of life while having that extra that we can invest. In our case, we're talking about investing in real estate. So it's that financial investment that we're doing over a year-to-year basis that builds that portfolio. So what you're saying then is, I would like to say, like, how much is enough today and the future that in this whole money equation, I'm earning, spending, saving, investing enough that's going to cover the totality of my life so that I don't drift. But like you said, to go back to what you're saying, is we can't be lazy about it. We have to have these intentions. We have to have these goals. We have to work these numbers. We have to take control of our life, that it's going to pull us outside of what Napoleon calls is that drift. And very few people do that work. There's no shiny penny. And if you're looking for the shiny penny, if you're looking for the one thing that's going to make you rich or get you out of your financial suffering or make it so you never have to work ever again, I don't know if there is such a thing. That everyone, again, myself, all of my peers, all of my mentors, those that have been financially successful, and not just financially successful, but those where I say some people have a lot of money and they're still miserable. But those peers and mentors of mine that are financially abundant and have a healthy relationship with money, good, healthy, happy, fulfilling lives with good marriages and good families, healthy, valued families, and they feel good about themselves. It didn't happen by accident. I just like to caution anybody that's like really trying to find that one thing. It's life's work. And money investing, it's all this is life's work to make enough and that again can pay for the quality of life that we want, but also sets us good up for a good financial future.
But the good news is it's fun and it's exciting and it's invigorating to do the work.
It is. And then there's it's invigorating to do the work. And then it's so satisfying when you get to experience the payoffs of the work. There's compounding interest, I think most of us understand, but everything compounds. Is that the hard work is so linear or so horizontal for such a long time, it feels like we aren't getting anywhere. But you stay true to the course, you stay true to the fundamentals, you do the work, you do all the things, and all of a sudden there's that tipping point, and then everything just really starts to build on itself. But those that are looking for that shortcut are really disillusioned, dissatisfied, or wind up broke because there aren't the shortcuts. You just have to be willing to live through the horizontal where there's not a lot of satisfaction coming back.
You're absolutely right. Christina, I love talking to you. I could talk to you all day, but I think you probably have other things you have to do, and I'm sure that so do our listeners. But what is there a question that you wish I would have asked you, or anything that you want to make sure? I mean, you've given us so many beautiful pieces of wisdom, but anything that you just want to make sure that people understand before we say goodbye?
I mean, I think we've alluded to all of this, is that what I do is I have a money school and I teach money mindset and money skill set, like for holistic finances, so that we really understand our money, build a really healthy relationship with our money, and know what to do with it very pragmatically. So that's what I do. Money influences every part of our lives. But what's kind of taught out there or spoken out there, it's not truthful. It's not real. Like, we're getting a lot of half information, many times misinformation, or just cultural mindset that has most of the country broke. Over 80% of our population is month to month, regardless of how much income. And the reason why is that money, to have financial success, and what I mean by financial success means money feels healthy. We know we have plenty. We're earning good incomes. We've got a good investment strategy. Like we feel pretty safe when it comes to money, and we feel abundant, and abundance is growing. To get to that place, it's not common sense, and there's no shortcut. There's always the exception to the rule. Some people do win the lottery. That does factor in, although they're typically broke within 6 years of winning the lottery. But that aside, is that money is a mindset and a skill set. And there's two types of mindset / skill sets. There's what I call the income game, which you're always focusing on trying to make more money and get that shortcut, and more this desperate attempt around money and thinking more money is going to solve all your problems and make you happy. And so it's just always in that rat race, and just rat race, grind harder, push harder, look for the next shortcut, find the magic penny. That's what I call like the income game, just where money owns you versus you kind of owning your money. The second mindset's what I call the wealth game. It's the wealth mindset. And the wealth mindset is, it's not about hustle and grind. It's not about shortcuts. It's quite the opposite. It's about everything you and I were talking about. It's about knowing your numbers, being intentional, wanting to build wealth and net worth, giving a crap about keeping up with the Joneses in order to hit your numbers. Knowing how much money is enough, knowing what values around money will keep you happy and are fulfilling. It's being truthful about money, that money does matter, and there's a certain amount of it that does get us out of suffering and out of crisis and these different things. And then just being very intentional and having a really healthy relationship where we're, building the things towards the goals and the dreams and lifestyle architecture, and staying out of drift, like we've talked about. So that's what I like to say, that to build real financial abundance and prosperity, it doesn't happen by accident. Those of us that have built it and have done so with a lot of intention, with a lot of all the stuff that we've talked about on the program. So that's what I would leave with, is develop a wealth mindset and really gain the desire to want to build real wealth, financial abundance, and real life prosperity that really matches up with kind of your goals, dreams, and desires of what it costs and what it feels like to live a good quality life.
Christina, how can people reach you? People who want to finally get hold of their financial selves and get intentional about this.
What I really invite everybody to do is to do this worksheet, and it'll take about 10 minutes to fill out this worksheet. And it's what I call how much money is enough exercise. It's the best place to start. It doesn't even really matter where you are in your financial journey. It will give you more clarity. The universe loves clarity, and we need clarity with money if we really want to produce those dreams and outcomes that we want. So it's attached to a quiz that's a little financial literacy quiz, and it's wisemoneymethod.com/quiz, wisemoneymethod.com/quiz. The 2-minute quiz will give you a little grade on where you are with your financial literacy. It's fun, 2 minutes. And it just, like I said, I'll give you a grade. Now, when I first created this quiz, I had an idea where it might wind up, but wasn't sure. But now, after thousands of people have taken this quiz, the average score is 32%. Those that are taking this quiz are those that are listening to these types of podcasts. So hard workers out there, so way failing. The goal is to get a 90 or, at least 80, 90, or 100% score, because these are not difficult questions to answer. So I say start there. And again, there's no judgment there. It's just like, take the quiz. Am I average, better than average? But even 50%, 60%, 70%, that knowledge is probably not going to get us where we want. So it's just a nice little reflection tool. Take the quiz, have fun, see where you are. But what's more importantly, attach that quiz. When you take the quiz, I send you a workbook, and that workbook is really the first step to start getting in touch with your finances. And like I said, start there. And once you do that, then it will point you in lots of different directions as to what the next step is. Maybe it's to call me, maybe it's to call Christine, maybe it's somebody totally different, but at least it'll give you some clarity of the next step to move to change directions.
Excellent. And those links, of course, will be in the show notes. Christina, thank you so much for being with us today. It's been a real pleasure talking to you.
My pleasure. Thank you so much.
And thank you, listener, for listening. Who do you know who isn't already financially free? Because all those people, and I'm assuming you know more than one person in that category, All those people need to hear Christina speak. So please forward this episode to them. They will thank you. And be sure to be here next week.